As requested by so many of you, in this video, we'll let you know how to use this amazing technical indicator called Fibonacci Retracements. While you're watching a stock price move up or down, have you ever wondered where it could bounce back after a correction? That's where Fibonacci Retracements come into play. They are a set of horizontal lines on a price chart that indicate possible support and resistance levels. They are based on a Fibonacci series of numbers where each number is the sum of the preceding ones. The crucial levels of retracements are 23.6%, 38.2% and 61.8%. These levels represent potential areas where the stock price might bounce back after a correction. Now let's understand this better. Let's say a stock has moved from 50 to 100 and the stock is facing some corrections at this price. Now, using the Fibonacci retracements, the stock may find a strong support at 81, that is 38.2%, and further below at 69, which is 61.8% in an upward trending market. Fibonacci retracements might sound a bit complex, and though they are not foolproof, but yet they are a valuable tool for traders and can offer great insight to enhance your trading strategies. Hit the follow button so that you don't miss any of our updates.